on the fiscal year end and annual report, Government of Alberta annual report, and be available to take questions. You should have all your materials by now, I hope. We do have people on the line, so just a reminder that we will be taking questions from the phones as well. And with that, I'll ask Minister Horner to join us.
First of all, I wish everyone a very happy Canada Day tomorrow, and enjoy the day and enjoy what is the greatest country on earth to live in, to work in, and to play in, and the fact that you're in Alberta, the greatest province to live in, to work in, and to play in. So today we do have good news to report after a fiscal year that included some extraordinary challenges that tested the resolve and the resiliency of Albertans, and of course tested the resolve and resiliency of the fiscal plan and the government. Certainly we have continued to turn that corner that we talked about earlier. Financially, we ended the year on a very positive note. As you can see on the slide, we are back in the black without question. The operating surplus being $2.5 billion, the actual change in net assets or the fiscal plan surplus now being $755 million, which is a considerable turnaround from what we had projected to be the $1.975 billion deficit or the $450 million deficit on the operating side. A look back does show that the fiscal plan surplus deficit numbers have been volatile over the last few years, but obviously we are definitely moving in the right direction. And that is good news for Albertans. A survey released last week showed that 40% of Canadians think Alberta is the best managed province in the country, with Ontario and BC a distant second and third. And Alberta is also seen as the best place to start a business with the lowest taxes, and it's no wonder our economy is firing on all cylinders. It continues to grow. The population is growing considerably, as we've talked about in the past. We have had higher resource revenue. Overall, resource revenues are up. Overall revenues are up. We set a new path in 2013-14, committed to responsible spending, and our spending did end well below population plus inflation last year. And that positioned us to deal with challenges including the flood costs, the population growth, and the energy volatility. It also means we're on track to be in a surplus position for our budget in this fiscal year. Alberta's economy outperformed Canada and the United States, as this is no secret to most. We've had most of the banks and the economists predicting that Alberta will continue to be the economic engine of Canada, and that's clearly showing here. Our 2013 GDP growth was 3.9%. For the fourth consecutive year in a row, we've had growth over 3%. That's nearly twice the Canada's real GDP growth. Our unemployment rate stayed steady at 4.6%, and that's even when we led the country in job creation and created more than 61,000 new jobs in 2013, which was the lion's share of jobs created across the country. We have got a healthy economy. More jobs are attracted, record levels of migrants, over 50,000 from other provinces, and over 50,000 from around the world. The highest population growth in over 30 years, and more than triple the national average. We are continuing on a pace to grow by another million or so in the next decade. Total revenues were strong. We've had $45 billion, more than $45 billion, $6.6 billion higher than the budget due to obviously higher resource revenue, higher tax revenue, more money in the federal transfers due to the floods. We booked, as you recall, when we talked about this before, we booked the revenue and the expenditures in this budget year. And of course, as we recently heard, higher returns on our investments in the Alberta Heritage Savings Trust Fund. Some of the challenges that we've had, of course, have been revolving around the differential and the oil price differential. Those challenges, the volatile energy market and a differential between WTI and the price that Alberta producers receive for their bitumen. We saw large swings in the differential in a short period of time. But the swings in the differential have been happening for some period of time. They haven't been as wide or as volatile in the past. So March 2013, as many of you know, we were looking at a potential shortfall in revenue of around $6 billion. That had to do with both the differential and the production side of that. So our challenges in the price differential and our energy assumptions is that the volatile energy market and the differential will continue. And I think there's no secret here either, that we're going to have to manage through this for the next period of time until better market access is achieved. Overall, we had underestimated the key energy and fiscal markers, so did everyone else. In fact, I remember being accused of perhaps being a little bit too positive in some areas and too negative in others. But this is good news for our producers, it's good news for the province and all Albertans. Our operational expenditures of almost $42 billion, they're up by $3.8 billion from budget, mostly due to the flood costs, as many of you also would know, but it was also because we did backfill and provide additional funding to address what was the largest population increase we've seen in our province in over 30 years. And that was a significant amount of challenge on the basis of schools, roads, hospitals, and service delivery to Albertans. But overall, we did maintain fiscal discipline, and we reined in spending and expense growth to lower than previous years, and that wasn't easy. Population growth plus inflation was 5.6%, and over the past 10 years, the average increase in operating expenditures has been 7%. So we were able to rein in spending and deal with those things as they occurred. The flood, we've had some discussion on this, I know was released last week. It is a $6 billion natural disaster. We were close to $2.8 billion in operating expense. It's going to take years to fully recover from this flood. The government reacted quickly, provided nearly $3 billion in flood support for Albertans, small business owners, and communities. And even with the flood spending, we did still end the year with a surplus. Operational revenue, as we talked about, is up, as is operational expense. And as I said, due to flood pressures and costs and the growth pressures, operational surplus, $2.5 billion, $2.9 billion higher than what we had in budget. And again, as we've stated many times, Alberta remains the only province in Canada with net assets. Financial and capital assets exceed liabilities by $45 billion. That's a $755 million increase in our net assets and no borrowing for operations. We maintained the capital plan at $5 billion, delivering the right infrastructure at the right time. Albertans told us that it was okay to go to the capital markets to borrow for infrastructure when it makes financial sense. And Alberta's AAA credit rating allows access to interest rates that are close to 50-year lows. As you can see, we're nowhere close to the debt cap that we have instituted in the fiscal framework, and our average borrowing costs roughly about 3.5%. On the savings side, again, good news. We've had strong savings growth in the Heritage Fund, brought in returns of 16%, ending the year at $17.5 billion on a fair market value basis. We had a contingency account, ended the year up $4.7 billion, and as you were told in the technical briefing, with $1.3 billion in addition to be deposited in 2014-15. And overall savings, including the Heritage Fund, now sit over $23 billion. Then we get to the financial statements, and it's important to note here that the numbers in the consolidated financial statements will differ from the numbers in the provincial budget. It has been that way for a long period of time. There is a historical analysis in your package that goes back 15 years, you can see that. The consolidated financial statements includes the accounts of all of the organizations the government deems to control, so the such sector. The biggest difference here that you'll see is between the number that we took in for the pension liabilities that we have on the pre-92 teacher's pension. If that, all things being equal, if that was to have been what we budgeted, the two consolidated and the financial statements would match up fairly closely as they have in previous years. With everything included, we ended up fully consolidated with the such sector and the pension allocations to be around a $302 million overall deficit. But again, to be clear, this number is only used at the year end for financial reporting purposes. It has never been a part of the budget or the fiscal plan, nor does it represent a fiscal plan surplus or deficit. You'll see how these numbers have evolved over the past years on this slide. The next slide. There it is. And the Auditor General, I must also point out, has given Alberta a clean audit once again. Albertans can be sure that they are receiving high-quality information from the government on the province's actual financial performance. And as you can see, these numbers have always been different once we consolidate in the such sector and pension liabilities. The changes in accounting standards have also played a role over the number of years. We've changed the standards. The standards have changed and evolved over the years, which they have for the private sector as well. Province's pension obligation, $11.6 billion. That's the increase of $748 million. The cost of the public sector pension plans is up due to the increased life expectancies and, of course, the continued low interest rates on long-term fixed incomes that pensions would invest in. This should be a signal that even with double-digit investment returns, the plans are still dealing with significant issues regarding long-term sustainability. So what are other people saying about Alberta? And economists, financial experts, Alberta is the shining light within the country. Conference Board of Canada's economic report card gave Alberta top marks. We were the first out of 26 jurisdictions, including all provinces, and 16 peer countries. That would include Norway. We had an A+ overall. The Alberta Economic Development Authority report shows Alberta maintains our competitive edge and ranks Alberta's first or second in 26 categories, including economic well-being, productivity growth in energy and agriculture. The Centre for Innovation ranks Alberta #1 in Canada for the level of entrepreneurship. So, obviously, Alberta is in an excellent position to continue to grow. We lead the country in growth, population growth. Budget 2013 charted the course that we can continue to follow. It enabled us to meet the challenges head-on, including the high cost of floods, and still end up the year with a surplus. We're on our way to another good fiscal year, still keeping in mind our challenges expected and those unexpected challenges that we know pop up throughout every year. We're reminded of that last month when the rainfall in southern Alberta created some flood potential. We're continuing to monitor all of those issues, and we're continuing to go around that corner financially and looking forward and ahead with optimism on the province's finances. And with that good news piece, I will go to questions.
On natural resource revenues and obviously the astonishing returns from the Heritage Fund. How do you respond to your critics who say we're still too reliant on natural resources?
Do you know, the natural resource revenue that we put in budget 2014-15 represented about 21% of our investment, or of our revenue. Obviously, when you have increases due to the price and the differential, we get what we used to call windfall. What we're saying is tax revenue is up $1.1 billion and we didn't raise taxes. The economic activity that is happening in our province, the manufacturing sector, is starting to show up in that tax revenue as well. Close to 50% of our revenue we're projecting for this year is actually related to manufacturing and corporate income tax on that basis. So we're moving in the right direction. But as an energy province, we're always going to have revenue from our energy. So I'm not going to apologize for it. I think it's very positive news for Albertans. The positive piece that is in our numbers today is that there's more manufacturing in our GDP. There's more financial services sector in our GDP than there has been in some period of time. So when you look at that pie and how the GDP is split up, I don't think we've got that in this deck. When you look at that pie, the dependency is changing.
Minister, without flood, what would your fiscal plan surplus be after factoring in what the feds will pay back? What would your surplus be without flood?
After factoring in what we think the feds will pay back or what we want the feds to pay back? You're going to end up with a much higher surplus than what we put in there. I mean, the flood probably hit us by about $1.2 billion. And I'd check that number because, again, what we've done in terms of last week, the Municipal Affairs Group talked about there's a number there that we're not sure we're going to get back. We're going to work real hard to get it back because I still view that as a receivable, but we're being prudent about what we're booking. So it would have been a good year. Yeah, it is a good year.
72, you can add something around $1 billion.
You'd probably be up a couple billion, yeah.
What do you make of the comments from your predecessors regarding how you're reporting the budget figures?
Well, I mean, as I said in my statement that I released last week, I don't have a problem with what Mr. Prentice wants to do in terms of bringing a group of experts around a table, including the Auditor General, maybe the chair of the Chamber of Commerce, and talking about the format. The reality is the bottom line doesn't change. Even going back 15 years of the budgets that you have in your package, the bottom lines don't change. The number's not going to change, even if you wanted to. But to return to 1997 budget reporting practices actually wouldn't comply with the Public Sector Accounting Board standards that we're now complying with. The Auditor General would find fault with that and certainly would be in a position to write us up. We got a clean audit. And I would not want to do something to jeopardize that because of politics. and I see this as more politics than anything else. Interesting that, of the 10 budgets that were delivered before I became the finance minister, and since the change in 2003, now the former ministers, those former ministers, not all of them, it's only 3 of them that actually had budgets after the change of 2003. You can't go back to something that has changed. It'd be like asking public sector companies to go back to old accounting standards. I don't think the shareholders would appreciate that.
So you're saying there's more politics than anything else? What do you mean by that? What do you mean by more?
Well, I think Albertans deserve nothing less than to be able to show them that we're balancing the budget, not just by not building a school, but by actually managing operating expenses.
Going back to the, you mentioned the bottom line. You're out by $6.6 billion when it comes to revenue. Okay?
Up, yeah.
Yeah, up.
I thought you said out by, and I was,
Oh, no, well, out in the sense that your projections, your predictions were out by 6.6 billion. Why should Albertans trust any predictions or projections that you make if you're out by that much?
well, because I don't make them. Remember, we went through this last year. You guys reported on it. In fact, many of you were in the room up in 512 when we had the economists in the room telling us what they thought the numbers should be. So it's not us that makes those projections, Grant. We take all of the best minds across the country, the financial experts across the country, and the economists. In fact, the Conference Board of Canada held a forum last year in Calgary where we said, tell us if there's a better way to do this. Tell us if there's a way that you could get more accurate in your forecasts. We're using that system. So I'm not sure that there's any other system you could possibly utilize other than, being a soothsayer, and I'm not one, and nor is the industry. Nobody would have predicted the 70% increase in rail transportation of oil on rail. Nobody would have predicted that you're going to move oil by up to 1 million barrels a day on rail. Nobody would have predicted what is happening now in the Middle East or in the Ukraine. I mean, you can't predict this stuff. What you do is you set a budget, you stick by it, you set the projections there, and you accommodate yourself in there. Our fiscal framework is set up to manage this type of situation.
I think you're going to have more than $5 billion. You may have $6 billion into the fund,
Yeah.
the contingency fund. What's going to happen? You keep that $6 billion in there. You're going to spend $1 billion of it, so it's still at $5 billion.
The fiscal framework that we passed in 2013 it allows for some flexibility as to where those funds are going to go. And the reality is you really got 3 choices. You can leave it in the contingency account. There was a policy decision that you wanted to make a target of 15% of your operating expense should be in the contingency account. You could do that. You could put it into the capital plan. And obviously there's a considerable amount of capital that is going to have to be constructed in this province over the next 5-10 years, especially if we continue to grow at the rate we're growing. You can put it into savings, and you can continue on that. But the operating budget is the operating budget. That's one of the reasons why we put it out there.
So what's your preference for that extra money?
I don't think the decision's been made on that yet.
So, Minister, this is the first, are you saying, the numbers show it, but I just wonder if you'll say it, that this is the first genuine fiscal plan surplus since 2007-8?
Well, all of them have been genuine.
I didn't mean it that way.
Well, I think you did, but that's okay. The reason we put that historical fiscal summary in the back page for you is because somebody had mentioned we want to be able to compare back to the others. And I've been saying all along, we're calculating this the same way that others have calculated it in the past. That's why we put it in there. And yes, this is the first fiscal plan surplus, not the first operating surplus, but the first fiscal plan surplus if you go back to 2006, 2007. That's good news.
Meaning consolidated operating and capital.
Yep.
So is that good? Are you good? I thought
Of course
you
it's
should be
good.
dancing back there.
No, of course it's good. It's obviously good. And it's something that we also suggested was going to happen if we were to maintain our operating expenditures a tight rein on that underneath population plus inflation. And I think that has to be the plan going forward.
What was your reaction when you first got the numbers that you were going to be marking a surplus rather than the forecast deficit?
Well, I hope my reaction is going to be the same as Albertans, that one of happiness that we've come out of a period where we were using our savings or using our contingency account to manage our finances, and now we're in surplus. I think that's a good thing.
Are you saying that the tough budget, the cuts that were made in 2013 was necessary to deliver this surplus?
You can go back hindsight's 2020. I'm saying that those cuts were necessary to get us back in a fiscally prudent strategy of being under population plus inflation, and I think we need to stay there, under population plus inflation. Obviously, population plus inflation was 5.6%. We were under by a significant margin. We're challenging ourselves to be under that by a significant margin in the budget moving forward, because that's a financially prudent thing to do. That has to be balanced, if you will, with the population growth, the economic growth, the tremendous amount of challenges that we have because of the growth. But I would rather have those challenges than some of the challenges that I know some of my counterparts across Canada are facing. You know, if Alberta's gaining 50,000 people from across Canada, somebody else is losing those. That's consumer spending that is not happening in their provinces, but it's happening here. And remember, it isn't just revenue from royalties. That's not, in my mind, that's not the huge story here. The huge story in my mind is consumer spending is up, average wages are up, our tax roll is up, personal and corporate. You know, that whole mix is a stronger foundation than just royalty revenues is up. And we are the economic engine of Canada. A lot of that money is flowing across this country.
As oil sands production ramps up, if it does, with pipelines, with all of the projects, I think every one of them's out of the capitalization royalty scheme, right, the early scheme. Isn't that a large part of what we're seeing here, and also isn't this what is sort of bonanza time for the future? Like you go back and say it's gonna be like 2006, 2007 again, if that.
I'm sure somebody said that when we got $8 billion in gas royalty some time ago too.
Yeah.
We don't know what's coming down the pipe. Technologies change, new discoveries happen. The volatility of the differential, for exactly the reason that you're talking about, where our production numbers are up. So that differential hits a bigger chunk of our royalties than it ever did before. I mean, that's another side to that differential story, is as your production levels rise, more of your royalties actually affected by it. I think I would not want to make the comment that, you know, the sky's the limit now, because every time somebody's done that, obviously, you know, like gas, things happen. And I think we have to be ready for the unexpected, and we have to be prepared. And the fiscal framework that we now have, with a contingency account, a savings, and a capital plan, actually prepare us better than any jurisdiction in Canada. I would hazard a guess, any jurisdiction in North America, to weather what might come in the future.
Is $5 billion enough, though? You used most of $17 billion to weather this last storm.
Well, and a lot of that 17 billion went into capital, and that's part of the balance that you need to have in terms of capital and operating. I think the policy decision that the target of 15% of operating expenditure for the contingency account is still a good one. That remains to be seen if that's what Treasury Board will do and the future Treasury Boards will do.
One of the last things that Premier Stelmach did before oil prices crashed was announce $4 billion in spending from anticipated revenues. Remember Green Trip and carbon capture. Are you going to resist, as this increases, are you going to resist the temptation to spend anticipated revenues?
Well, it's not my call alone to resist temptation. Obviously, I've put forward a fiscal plan for the province of Alberta. There's a fiscal structure there where we have a capital plan, an operating plan, and savings. I would like to see us manage our way through that with the surpluses going to those three areas.
We do have a question on the phones, operator.
Yes, hi, Minister. Some of the candidates for the leadership have proposed accelerating the rate of debt repayment. Do you see the current windfall as an opportunity to go in that direction?
Well, as I said, Mark, earlier, the fiscal framework that we have today actually provides some significant flexibility for this government and future governments in terms of balancing the needs of the capital plan, the savings, and in the future, the operating, and the contingency account. So the choices are, you can add to the contingency account, as we just talked about in terms of that policy decision. You can put it into the capital plan and reduce borrowing or increase the capital plan. You can put it into savings or a balance of those things. That's a decision that Treasury Board and the government of the day will make.
Thanks.
Leadership prediction Prentice's proposed capping the debt for infrastructure at around 20 billion. Right now we're at 8 billion. We're scheduled to hit 20 billion in the next 3 years. Is that doable?
It depends on how you cash flow it out and what you're building. So that's a decision and something that Treasury Boards in the future will have to deal with.
But will it, I guess my question is, will it undermine our infrastructure development? Will it get us in the same position that we are in now, where we're not investing in infrastructure to meet the population demand?
Do you mean paying down the debt? Well, again, it's a balance of, I separate, you know, the idea of we're going to the capital markets from what we're gonna build. My view is we're going to the capital markets because it makes good financial sense to do so at 3.5% or lower. If we want to raise and increase the capital plan, or if you want to accelerate that capital plan or the repayment of that debt, obviously years like this will help you do that.
Mr. Prentice says 50 new schools, 50 more new schools. Mr. McIver says that's fiscally irresponsible. What do you say?
I'm not gonna comment on the leadership race.
Can we afford to build 100 new schools?
Well, we're gonna build 50 now and 70 modernizations, and I think as you review the capital plan, and in the future, the government will have to review the capital plan, and that'll be a decision they'll make once they review what the needs are and what the capacity of the industry is.
A newspaper poll on Friday suggested that Albertans, unlike previous years where they say health and education are their top priorities, transparency and fiscal accountability were their top priorities in this most recent poll. How concerned are you that the changes in the budget presentation have undermined Albertans' faith in the reporting of the fiscal numbers?
Well, I guess the faith in the reporting should be based on the expert advice as to what they're getting in terms of the financial reporting. And I would suggest to you that when the Auditor General of Alberta says that they are getting excellent financial advice, and when experts in financial matters are saying they're getting very transparent financial data, I can only speak to the numbers. I'm not an accountant, but I can tell you that nobody in the accounting field is saying that our number is wrong. And in fact, they're saying it's right. And you can go back 15 years.
You're not following general accounting practices.
That's not what he said.
He said that at public accounts meeting. He's talking about your budget presentation, not about your
Right,
annual
the budget
report.
presentation, is the policy
He's talking
document.
about this document and not the document that he's talking about and everybody else is talking about.
Karen asked me whether or not the financial information was accurate. This is accurate based on public sector accounting principles and standards. The budget is a policy document based on what we intend to do in the future. So you're not gonna have financial statements that are gonna be accurate in a budget because it's a projection of something that's gonna happen in the future. I mean, would you say that our estimates on oil and gas are accurate today? Obviously not, because they've been proven wrong. The financial statements and the wealth and the ability or the position of Alberta's finances are based on these financial statements at the end of the day, because this is what actually happened. This matches up to our budget of last year, the differences we've accounted for. If somebody wants to show me that there's a better way of doing this, I'm open to that. But to go back to 1997 as an example, where you could balance the budget just by not building a school, that's not an accurate reflection of what Albertans are looking for either. Plus, you can't, because that would violate the public sector accounting rules. So, in answer to your question, these numbers are accurate based on all of the standards and all of the reviews that are done by the people who are doing those reviews and the experts in the field.
I guess my question is, how much political, I mean, you can't deny that there's been a lot of hay made over this budget
Oh, yeah.
presentation issue. How much political damage has been done to the Tory brand?
Well, I mean, politics, I'm not going to get down on Tory brand. What I'll say is it has, in the past, I think it confused Albertans as to whether or not we were presenting accurately the financial picture of the province. And what I'm saying to you is the Auditor General has said that we portray the picture of the financial situation of the province with no reservation. With no reservation. I think that's where Albertans should take their faith. They don't have to take it from me. Take it from the Auditor General, the guy who's been tasked to make sure that happens. They don't have to take it from me or the Auditor General. Take it from the guys that are lending us money. They look at our statements and say we are more transparent than any other jurisdiction in Canada. Those are the places you should take it, not from the politicians. And frankly, if that's where their financial expertise is coming from, that would worry me a great deal if that's who you want to run your province.
Is there
Last
one thing
question,
that you
please.
did in that 2013 budget that you regret, such as making it much harder to find a comparison with
you know what?
earlier years?
Can we go to the next slide, Wilson? Go to the first slide in the deck. Somebody on that yet? There, nope. Well, okay, yeah, get to the very first slide. I'm gonna show you what I should have, whoop, next. There. I should have showed you that. And when I apologized to the Herald about that I made an error, this was the error I made. I didn't show you this. Because I made an assumption, wrongly, that people knew as much in you know, a lot of the business community, that the Chamber of Commerce had talked about going to an operating spend savings and capital plan. And my error was not showing you this. So in that sense, yes.
Can I ask one question about the Heritage Fund?
Sure.
The director of the Heritage Fund, Leo the Beaver, said to me last week that he persuaded you to, I think he turned it off now.
Yeah, don't turn it off now.
He had persuaded you actually to leave his money leave the money with him instead of pulling it out to pay for capital expenditures. How much consideration was given to taking money out of the Heritage Fund to pay for capital?
Well, I mean, as I said in 2013, what I did was I went around and had discussions with about 75 CEOs and CFOs, captains of industry, people around our province who are dealing in mega projects and dealing in building their own small warehouse. And I said, how do you do your capital? That's where this came from. It wasn't my idea. It was 75 meetings with captains of industry, Leo de Beaver being one of them. And I said, what's the best way for us to build the infrastructure that we know Albertans are going to need, given today's financial environment? His comment was, leave the money that he has with him, because he's going to earn a much better return than what we can borrow for. And it made financial sense, when the rates are at 50-year lows, for us to use other people's money and keep our own. That's what business does. That's what capital planning is happening across this province in mega projects. So in that sense, Leo was one of those 75, as was Jim Dinning.
Could you have done that without changing the legislation? Could you have taken money out of the Heritage Savings Fund to pay for capital without changing the current rules?
I'm not sure that there wouldn't have been a change in the legislation in either event, because we were changing, because we changed it so that we'd put more money into the Heritage Savings Trust Fund. We actually created legislation that now says the earnings from the fund are going to stay in the fund. So in a sense, we did change legislation, but the opposite way. We're putting more money in, and we're legislating it for the first time in 26 years to actually put money aside every year. That got lost in a lot of this messaging as well, is the sense that Albertans told us they wanted us to save, good or bad. We put legislation in place to do that. There has been in the past, and somebody mentioned the 17 billion, well, let's not put it into savings because we won't get it out. Let's create a capital account. Well, we have a capital account. We have a debt repayment account. So before the money goes into savings, we allocate money to those accounts first. So necessarily, would we have to do legislation? You probably would have had to. We do every year, pretty much, in terms of the budget. So.
Thanks very much, everyone.
Thanks very much, guys. Appreciate it.